So how are the mortgage interest rates and inflation impacting the GTA housing market? So let's talk about inflation first. Home prices have been increasing and they have been increasing really fast over the last year. If we take a look at the new housing price index, which compares homes with the same features year after year, we're seeing a 22% increase in inflation in the housing market in just 2 years. That means if your house is worth $1 million in March 2020, that same house with the exact same features would be worth $1.2 million in March 2022 in just 2 years. In this case, your home value would increase by $200,000 in just 2 years. Why is the inflation happening this rapidly in the housing market? Well, there are 3 reasons for this. Well, number 1 is that the Bank of Canada has printed 3 times as much as money over the pandemic than their typical amount. Going into the pandemic, the unemployment rate went all the way up to 13.4%. According to Statistics Canada. The Bank of Canada, alongside with the Government of Canada, added more money to the system to stimulate the slowing economy to promote spending. But this also caused prices to increase. The saying with inflation is that there is more money chasing fewer goods. If we put more money into the system, we have to spend more of that money to buy the same amount of limited goods. So we are seeing the effects of inflation in the Consumer Pricing Index, which measures how much typical goods cost, like food, fuel, healthcare. And this consumer pricing index has gone all the way up to 6.7% in just 1 year. And this is record high. We haven't seen this kind of inflation since 1991. And the government always aims to keep this inflation at around 2%. So you can imagine 6.7 is a really high number in comparison. So that was reason number 1, which was printing money. Number 2 is cost push. So cost push means that the manufacturer or the producer is pushing their cost to the consumer because it's becoming more expensive to create whatever product or service that they're offering to their customers. In terms of real estate, this means that there are labor shortages, building materials are becoming more expensive, and there's more red tape measures introduced by the government that makes new home construction longer and more expensive to build. So reason number 3 for inflation is demand pull. Demand is simply overtaking supply in the housing market. So one reason for the demand going up is because we have a massive influx of new immigrants coming into our country every single year. About 400,000 immigrants per year. And they all need homes. And in Ontario, 60% of people prefer owning a home rather than renting. Another reason for the demand pull is that people are buying houses with borrowed money. They're using their home equity line of credit either to buy investment properties for themselves or they're purchasing for their children. Interest rates are as low as they have ever been, and everybody's taking advantage of that. And they know that the homes are anti-inflationary, so they're doubling down on the housing market. And another reason is the pandemic. Over the last 2 years, people have been sitting home, they've been saving up money, and now they're seeing the increased value of investing in a home with an office. And that is also increasing the demand of housing in general. Well, when you factor all this stuff in, it's not a surprise that the housing prices are skyrocketing right now. And this brings us to the mortgage interest rates increasing. You see, to keep inflation under control, Bank of Canada is going to increase their overnight interest rates. Check out this graph. This is what the Bank of Canada's overnight interest rates look like for the past 10 years. In 2022, we saw the Bank of Canada increase their overnight interest rates from 0.25 to 0.5% in March and from 0.5 to 1% in April. Increasing the overnight interest rate makes it more expensive for the major banks to borrow money, and they pass down this additional expense to their customers by increasing their prime rate. When you go take a bank loan, like a mortgage, the interest rate that the bank charges you is based on their prime rate. So when the prime rates go up, so does the monthly mortgage payment for a lot of people, and that really impacts, home affordability. With rising mortgage interest rates, buyers actually qualify for less of a bank loan than they did before, and that really decreases the purchasing power of the buyers in the market, which influences the price ranges that a typical buyer can afford in comparison to when the interest rates were lower. On top of this, rising interest rates increases the monthly mortgage payment for homeowners with variable mortgages or homeowners that are getting their mortgages refinanced. And sometimes they cannot afford their monthly mortgages and they're forced to sell their homes at a lower price. So as you can see, increasing the interest rate kills some of the demand and bumps up the supply to some extent. So there's a lowering of demand because there's less qualified buyers in the market that can afford to buy homes at the current prices. And you have more sellers putting more inventory into the market because they can't afford to hold their homes because of the rising interest rates. And this all works together to lower the home prices, because there's simply more supply and less demand. And don't forget, there's this whole perception or mindset by the buyer and seller which impacts the whole supply and demand of the housing market to some extent every month. So in conclusion, interest rates are increased to keep inflation in check, but not just for the real estate market, it's for the entire consumer goods and services. It's to keep our economy stable, and the target that the Canadian government aims is around 2% inflation. So interest rates going up is definitely going to impact home prices. They might remain stable or they might even decrease to some extent. But the bigger implication is that the overall real estate market is going to slow down. Increasing the interest rate is not a long-term solution to fix our home affordability crisis. The real long-term solution is making sure that our supply of housing keeps up with our growing demand. The government is planning to double the amount of home construction in 2023 in their new budget 2022 proposal. Tell me in the comment section below how the increasing interest rates and inflation has affected you personally in your process of buying and selling real estate. Hit the like button if you found this video useful. It really helps to spread the knowledge. And also subscribe to this channel if you want the videos that I make to reach your inbox as soon as I make them. Thanks for watching, and remember, stay informed.